Assalamu alaikum, Sabrine. Anyone, feel free to put in the chat where you're coming from, which part of the world you're in. These guys are based in the UK. I'm in New York City. I know we have a lot of people from all over the world, so let us know where you're from. Awesome. Thank you guys so much. Let's get started. So we got a bunch of Q&A questions that you all submitted. So we'll start off with that. And then anyone, if you have any questions, please put it in the chat. This is a space for you to feel empowered, for you to feel comfortable. These guys are the experts here, mashallah. So, there's a lot of questions that we'll be answering today, but any other questions, please put in the chat. So, Assalamu alaikum, everyone. My name is Nusrat. I'm here from Musaffa. I'm head of education here. We're an Islamic fintech based in New York City, Halal Investment research platform. We have with us Nisba, a UK-based Islamic financial education platform dedicated to empowering Muslims with the knowledge to make smart decisions in stocks and savings while staying true to Islamic values. So their mission is really grounded in the belief that wealth is an amana, a trust. So they focus on education, transparency, practical guidance rather than selling investment products. Also, they're just amazing, really cool guys. So I'll talk to you a little bit about about both of them. So you have Ahmed here. He brings over 13 years of experience as a fixed income broker, coupled with an impressive portfolio of professional qualifications. He's a chartered financial analyst, a CFA, and holds the Islamic finance qualification from the Chartered Institute for Securities and Investment, CISI. He has achieved the diploma in regulated financial planning from the Chartered Insurance Institute as well, CII. We also have brother Adel here. He holds a strong academic foundation with a degree in accounting and management, followed by a PGCE from the University College of London. He has over 6 years of teaching experience in economics across the UK and UAE, and he recently transitioned to the field of digital transformation, where he currently excels as a supply chain consultant. So I'm going to go right into it and ask you guys a bunch of questions. So we have a lot of people, yes. So we have a lot of people who are interested in investing, but they're struggling with just wrapping their head around like what are stocks, what are ETFs, what are bonds, what are dividends, just to give you an idea of who our audience may be. So I want to start off with, is investing in stocks halal or haram?
Over to you, Adel.
Great question. Ahmed, if you take the first part and then we'll go break it down, I think, bit by bit.
All right, wonderful. So is investing into stocks halal or haram? Just with many things in Islam, the answer is going to be it depends.
Mm,
Um, the idea of stocks, what is a stock even? A stock is just owning a part of a business. And so if you think about it from that very elemental perspective, is owning part of a business halal? Is owning a business halal? Of course it's halal. It's not only halal to be involved in business, it's if anything, it's encouraged. The Prophet's Sallallahu Alaihi Wasallam's first wife Khadija was very much involved in business, as was the Prophet Sallallahu Alaihi Wasallam. So now the question is the modern version of owning part of a business through buying shares, which is essentially what a share is that halal or haram? Well, two aspects from it here. Aspect number one, is that business operating in a halal business sector? Is it operating in, for example, the alcohol sector or the gambling sector? Or is it a financial institution which makes all of its money from interest? If it's in any of those kind of sectors and a few others, then typically, no, it wouldn't be considered halal to invest into. But there's more than that. There's more than just that, because almost every single company in the world does earn some money from impermissible sources. Um, think of a supermarket, a big supermarket in your country. Like we have Tesco here in the UK. I'm trying to think of that big French supermarket, trying to be
Part 4.
Carrefour or Carrefour for our UAE and French members here
Or
today,
Walmart.
or Walmart for the people in the US. Of course, those supermarkets they sell things like alcohol. So does that make them Sharia compliant? Because the majority of their business is actually halal, but some of their business isn't halal. And that's where we start to get into the details of how much of a company's income that it makes, how much of the money that it makes has to be from Sharia compliant sources for it still to be considered Sharia compliant. And there are rules around this. There are general guideline rules that a maximum of 5% of a company's revenue or income can come from impermissible sources and it can still be considered Sharia compliant. But then you get further questions like who made up these rules and why is it like that? Why is it 5%? Why is it not 4%? Why is it not 3%? Um, And there's more than that as well. There's other financial ratios that a company has to adhere to for it to be Sharia compliant. So actually trying to figure out if a company is Sharia compliant or not to invest into isn't a simple task.
Mm.
But has been made simpler.
What's the easy way of doing it, Adel? What's the easy way of doing it? I don't know. Tell me.
There's something that begins with Z, and there's another one that begins with M. But no, but I think just let's break it down in a really simple fashion. Why would you even invest into businesses in the first place?
Mm.
The idea is, if you have a job, if you have income, hopefully you basically at the end of the month you have money left over. And that's the critical part. Are you able to save money at the end of the month? If you're one of those people that is able to save money at the end of the month and not spend all of your money, then what are you going to do with those savings? And you have a few choices with it. And one of those choices is hopefully trying to grow it in a passive way. And that's why people talk about the stock market as a great way to grow your money passively. Because you investing into these businesses, you hope that they will grow in value, which means your investment will grow in value. So when it comes time to pulling out your money, you now effectively have more money than what you started with. And that's really what we're trying to break it down to, basically. What is the purpose of even investing in the first place? But if you wanted to, Ahmed talked about, let's say, your local supermarket, or, you think Apple, Nvidia, or some of your other organizations that you might be aware of, and you might be thinking, well, how do I know if if they're Sharia compliant? Either you can do it yourself, like Ahmed said, and you check the sector, and there's a bunch of financial ratios, or you can use platforms like Musaffa. And just think of it really simply. You already know what you want to invest into, and then you go to Musaffa, you type in the company name, and they've done all the hard work for you. So that's one of the nice things. Nowadays, it's not that hard. It used to be super hard, and that's what put most people off, I think, from doing it in a Sharia compliant way.
So you guys talk to so many people, and they're in all different stages of their halal investing journey, but many of them are beginners, right? So what do you get from these people? Like what's holding them back, or what would you advise them to be their first step? How would someone who knows nothing about this landscape, like what should their like one, two, three be, if that makes sense?
Well,
I feel like a nice way to approach it is you have two aspects here. You have one is investing, which is
Mhm.
difficult enough as it is, and then you have another layer on top of it, which is the whole Sharia compliant aspect. And I think if you try and bite off, or you try and kill two birds with one stone, try and tackle both points at the same time, it's going to be quite difficult. But
Mm,
if you learn the fundamentals of investing first, and then you apply the Sharia compliant side, the what makes it halal or haram thing on top of that, then you're going to find your journey a lot easier. You should firstly answer the first question. Should you be investing? And
mhm,
I would say the answer is almost for everyone, the answer is going to be yes. There is a part of your money, something somewhere, which should be invested. It may be a lot, it may be a little bit. And then comes the difficult task of finding out what can I invest into versus what should I invest into? What suits my situation?
mm.
What doesn't suit my situation? And then how can I do it all in a way that is halal?
could we maybe just do a very quick, question? I think there's like 60 people here. How many people, could you just say, have you invested or have you never invested before? Just so we can see a rough number of people. Yeah. Yes,
Go
I've
crazy in the
invested.
chat. Go crazy in the
Huh?
chat.
Yeah, invested. I invested. Yes, recently. Yeah,
Okay,
good. If you can give a
wonderful.
timeline. Never
There's one,
invested.
there's one,
Okay.
there's no.
Still investing. Okay. Investing using Musafa. Not yet planning. Okay, good. I think like if you're here, you already know the importance of it. Never, maybe hands up. Ah, started recently. Okay, perfect. Yeah, and like Ahmed said, if you have savings, you realistically should be considering investing. So it is for everyone. So the knowledge is something that you will need to acquire, whether you like it or not. And I think the quicker you get on with it and you overcome this hurdle, then you'll be set for life. I always like to give the nice comparison, right? If you go to the gym, you might see some gains very quickly. But as soon as you stop going to the gym, you will lose all of your gains. Equally, like if you get an Arabic teacher or a Quran teacher, it is great during the time in which you are practicing. But as soon as you stop, you feel like you will lose everything. The nice thing with learning about investing is once you start and once you learn how to do it, you never you never really lose that progress.
Mm.
you can do it and then almost forget about it in a really passive way. And maybe the Quran teacher is not so happy with my example, but hopefully you understand.
So I had so you mentioned I think earlier, yeah, just get started investing. But some people are unsure, like, how do I know I'm ready? How much money do I need to start investing? Like, do I need to pay off my debts first? Do I need to um, do all the research and then begin?
I always feel like if you try and do all the research before you begin, you have the risk of not starting. It's a bit like trying to go to the gym and having a full-on gym workout plan, and then after you do your gym workout plan, you then make a meal prep plan, and then after you do that, you then start to research the machines. Or because you're either too afraid of going to the gym, you don't want to make a fool out of yourself, you don't want to make a mistake. Where in reality, if you headed over to the gym and started doing the machine, even if you weren't doing it 100% correct, you'd learn a lot more by actually going and starting. The problem is, which some people might have the fear of, the problem is as a Muslim, if you go and do something in the investing space which isn't Sharia compliant, and that's definitely what you don't want to do.
Mm,
So as long as you understand some basics, and I think those basics don't take too long to understand. Basics such as what kind of equities, what kind of stocks can I invest into? What kind of funds are Sharia compliant? What are the different asset classes which are Sharia compliant? Are there Sharia compliant savings accounts in my country that I can look at? So I would say look at the basics, understand the basics, but don't try and understand everything before going into it. Because if you try and understand everything, you run the risk of not starting.
I feel like Ahmed, you didn't answer the question at all, and the people are going to leave with nothing there.
All right, you go for it.
So let's do it back and forth and let's see if we can give people almost like a checklist. Because the
Okay.
question was like, if you've got debt, do I invest or not? So let's tackle that part first. There's two opinions here. Some people will be of the opinion that if you have debt, make sure you clear it first before you start investing. Other people might break it down and say, no, if you have high interest bearing debt, i.e. 10, 15, 20%, make sure you cover that part first and then get investing. But if you have just normal kind of interest-free debt, that shouldn't stop you from investing. Okay? So that's the debt question. And I would always say, even if you had debt, but you were somehow able to perhaps put away £50 or $50 or €50 a month and start investing, that's a good thing to do because it's going to take time to learn. And you will only learn once you have committed your own money. So I would really recommend, even if you do have debt, try and start with something small just so you learn the habit. And remember, investing is like a muscle. It's not a mood. You need to train that muscle. So start small. I think the second part was what other things should someone consider in their checklist before they start investing in terms of what should they go and learn? I think, Ahmed, like what would you say like the basics are? Number one, understand kind of what your objectives are. What are you investing for? Number two, try and understand the risk and reward of different investments you are considering. So you could start with the stock market first and understand, okay, if I put £1,000 into this investment, how much can that £1,000 change over the course of 12 months? And that will kind of just help you visualize what actually is investing. Because the stock market goes up and down, but you won't feel that until you put your own money into it. Because I used to do this activity with students back in the classroom, and they'll be chucking in like $5 million into a trading account. And I'm like, it's not realistic because you're not feeling the impact of the psychology of putting and committing your money to an investment. So, number one, you can start small. You can start with less than £50 or $50 with most brokerage accounts. Number two, understand the risk and reward of the investment you're interested in. And number three, then start thinking about maybe a few follow-up questions to help you get started. But you will learn as you go. Anything you'd
And I
add,
would add
Ahmed?
to that, I would add to that that remember that investing comes with risks, and any money that you start investing, you could potentially lose all of or some of, depending on how risky what you're investing into is. So you have to understand that part of investing that you are taking on risk. That's why it's always advised to never invest money that you can't lose. And to set yourself up for investing, you should be first sorting out other things in your life. as Adel said, clearing high interest bearing debts. Not that Muslims should be taking on uh, debt or high interest bearing debt, but I understand that sometimes you're put in situations in life where it is unavoidable. But there are certainly things that you should be clearing first, and then consider this thing called a emergency fund, which is a build-up of 3 months worth of your expenditure in savings that you keep in a bank account. And if you have an emergency in your life where you need more money than you do usually, that's where you go to use money. You don't go to your investments. So you don't start selling your investments or anything like that. You go to your emergency fund. So it's about having the right things in place to start investing.
Awesome.
Some really good questions in the chat.
Yeah, definitely. So I did have a question that followed up with what you guys just talked about, and then we can go into the chat. Um, we have some people who have asked, like, do I invest all of my money at once? Do I do a little at a time? And you know, if you see a good opportunity, how much? Yeah. So if you have any guidance on that.
It's a great question, because we often get that as well. One thing to understand is, what actually is investing, because sometimes there's a bit of, I guess, misunderstanding here. Remember, investing is not something that is going to give you a second source of income today. This is not a side hustle. This is not another way of having an income stream. That's not going to replace your job. Unless you are sitting on extremely large, amounts of cash, this is not going to replace your job. So if you say, I'm investing because I want to quit my job in 12 months, you haven't really understood what investing is. So number one, investing is for the long run. Think, 5, 10 years plus. Number two, I completely forgot the question.
Your question right now made me forget the question.
Um,
Oh, is it like, does everyone invest all at once or a little at a
Yeah,
time?
that's the one.
yeah, yeah, no, obviously, yeah, definitely don't go all at once. If you've never done something before, don't commit wholeheartedly to it. You start small whilst you learn and you become comfortable. And the other part of your question was, if I see a great opportunity, do I dive in? Unless you are extremely well versed. Oh, God. Sorry, my cat just like jumped off the window and hit the desk. Um, unless you're extremely well versed in different investments, no, it would never make sense to really go all in. Okay. And don't try and time the market. Oh, I saw the price drop. If this is not your full-time job, this is not your daytime job, do not try and time the market. There's a great saying, which is time in the market is far more important than timing the market. So you trying to find the right price to enter is not the strategy for someone to be taking that is passively investing. You want to be thinking long term. I'm going to do this consistently, the first of the month, every single month, maybe for the next 5, 10, 20, maybe even 50 years. It's not, I'm going to be trying to spot opportunities, because once you move into that realm, you actively become a trader, which is not what we are talking about.
Thank you so much. So we had a question about ETFs, and maybe this is a good opportunity to even differentiate a little bit more, since more people came in, like the difference between a stock and an ETF. But then whatever you can share about it, like, are they halal? What are they? How does someone learn more about them?
The ETFs stand for Exchange Traded Funds. So they are a type of fund, and a fund is just a collection of different investments all contained within one vehicle or one investment. So instead of you going out and trying to make 100 different investments in 100 different stocks or 100 different bonds or 100 different sukuk, what you could do is just buy one fund, and it could contain anything from, a handful of different investments all the way through to thousands of different investments. So that's the nice thing about ETFs, or funds in general. ETFs are a specific type of fund which trade on an exchange, which is different from the old style of funds because ETFs are a relatively new concept. The old type of funds, called in the UK, they're called open-ended investment companies. Other places in the world, they'd be called things like mutual funds, things like that. They don't trade on exchange, meaning there's only one price and they trade once a day. But ETFs, they trade throughout the day constantly because they're traded on an exchange. So you can always see a live price. So that's all you have to really know about ETF is that it's a fund and it contains lots of different investments. Um, are they a good investment? Are they halal? Well, many ETFs are not halal, many funds are not halal because they're not made for Muslims. So what's within them hasn't been thought about from a Sharia compliant perspective. For example, you could have a fund which invests into the S&P 500, which is by and large the 500 largest publicly traded companies in the US. Now, if you know some large companies in the US, you will know that some of them would not be Sharia compliant because some of them are in the gambling industry. Some of them are in the adult entertainment industry. It's not going to be Sharia compliant. And generally, most funds are like that. They're not going to be Sharia compliant. However, some funds have been made specifically for Muslims, which is great. They'll usually have the word Islamic in them or Sharia in them or something like that. There are about 20 which are available here in the UK. However, depending on where you live in the world, you will have a different number that is available to you. Um, so the question about whether they are a good investment depends on your situation. If there was an investment that was good, which was the best investment, do you think we'd waste an hour of our time on this call discussing different investments? No, we just say, look, everyone should go and invest in Nvidia because that's the best investment. Or everyone should just invest in this one fund. That is the best investment. There isn't one investment that is best. There isn't one fund that is best that will continuously do better than all the other funds. It doesn't work like that. Different funds have different levels of risk in them, meaning they can go up and down in different amounts. And you should choose funds based on your risk profile, which opens up a whole nother can of worms, the UK expression.
Just want to plug in here that Musaffa actually has the world's first ETF, a halal ETF screener. So everyone who's asking in the chat where to find it, you can as well. But then also Nisba provides all these resources on their website as well. So I'll link both of them. Oh, Adel, did you want to say something?
No, I was just going to say, like, it's a really, really great point. And you know what? I think sometimes we overlook that the word fund or ETF can be quite confusing for people. So just really, Ahmed gave a great explanation. Just boil it down to its simplest thing. You can invest into a single company. When you invest into a single company, obviously that is quite high risk because a single company could fail. When you invest into an ETF, the nice thing you get is a bit of something called diversification. So it's just like a pick and mix bag, or think of it as a collection or an assortment of different businesses in it. You can have an ETF with a piece of 500 companies. Now, obviously, if you ask yourself the question, what is more risky to invest into, one company or 500? And hopefully you come to the conclusion that investing into single stocks is very high risk because you never know what might happen to that one company. But investing into 500 in one go hopefully reduces the level of risk. And so for a beginner, what do you think is more practical? Trying to pick that one stock, which is going to be the winner, or maybe spreading your bets across 500 companies? And obviously the growth might be slower, but you are minimizing that kind of downside risk. And the great thing, like you said, with Musaffa, if you're not sure about the ETF or the fund, whether it's Sharia compliant, you just type in the name and it tells you. Like it's a 2-second job.
What if you want to make lots of money really quickly, Adel?
Again, it's the risk profile part you need to understand. Because if you want to make money really, really quickly, then there's lots of things you need to consider, but that's not what investing is. Investing is obviously about the long term and being patient.
So what about Nvidia? Nvidia's done really well.
But can you, yeah,
The problem is, I would say that a company that's gone up a lot can also go down a lot. And
Mm.
we've given there's a famous example in the US called Sears, which is like a really big, it was a really big retail giant. A UK equivalent might be something like Debenhams. I can't say for France or the UAE. But this company, Sears, was massive. And they were the number one retailer, like the Amazon of the time. And they even built this building called the Sears Tower in the US because they were making so much money. But they didn't innovate when the internet came along. And when they didn't innovate, Amazon came along and Sears is almost bankrupt, if not bankrupt. So that stock, which was doing amazingly for years and years, and all your parents would have said, "Oh, this is a great stock. This is a great stock," is now almost worthless. So that's a problem with betting on one company. While it can do very well for a long time, it can suddenly the fortunes can suddenly change.
Definitely. Thank you both so much. It was super comprehensive and you tackled from all different angles, mashallah. We had a question about dividends. And so a lot of people ask about it. Is it passive income? Should I invest in stocks that give dividends? Is dividends halal? So please give a dividends 101 for everyone who wants to know about it.
So a dividend is just a small payment that a company might make to you for holding the stock, and usually it's paid out from the profits that the company makes. It's not going to be a huge amount. Typically, dividends are in the 2 to 3% range. Some companies pay out a slightly higher amount. Most companies pay that, if nothing. Because you got to think about it. If a company is making money, what's better for the company? To reinvest that money within the company so the company gets bigger, generates more money, or do they want to use that money to just pay out to their shareholders, effectively lowering the amount of cash that they have available to grow the business? So a company, if it's paying dividends, is usually a large, mature company which doesn't have too many areas for expansion. So it's just paying out this money because it's large and mature. So companies like McDonald's, for example, it's a large, mature company. They probably pay out dividends. Apple, I believe they started paying out dividends. Whereas companies that they could be very large, but they could be rapidly growing, like Nvidia. I don't believe Nvidia pays out a dividend, and why would they? Because they could be rapidly expanding their operations, or Tesla with new factories. So sometimes when you're investing for dividends, you are potentially losing out on that extra potential growth that you could be getting if you want a growth company. Think about it another way. You can actually create your own dividends. Say you wanted a dividend of 5%. If you invest into a range of different stocks, you could sell 5% of your holdings each year. That way, you are effectively creating for yourself a regular stream of income. And if your company has gone up 10% in value and you sell 5% of it, you're in a way creating your own passive income. And this question can become quite technical because in some jurisdictions, like the UK, um, making profits from the rise of a stock price, i.e., the capital gain, is more tax efficient than actually receiving dividends and paying tax on those dividends. So, dividend investing is one of those odd things that people gravitate towards, but actually there's a lot of negatives to it because generally you're selecting mature, slow growth companies, and it's not as tax efficient. However, there is a time and place for dividends. There is a time and place for dividends.
Maybe we should make a full-length dividend video.
Yeah, maybe we should one day. I've
Everyone
never
has
been
questions
big
about
into. Yeah.
you brought up earlier about the 5%, and everyone always asks about like who created these percentages, the 30%, the 5%. There's a lot of questions from that, but maybe we can start off with the 5% threshold, as well as the concept of purification.
So, in terms of this question, basically what we've said is you can, generally speaking, invest into a business providing that their main source of activity is Sharia compliant. Now, the scholars previously, when they were looking at this concept, it was deemed that investing into businesses was not possible because every business had a level of impermissible income. And you might be thinking, what does that even mean? So let's take here in the UK or in Europe, we have a store called Hotel Chocolat. Okay, they sell chocolates. Now, in theory, no issue there. However, they recently came out with a alcoholic chocolate range. So now it's a gray area. What do we do? And you have other examples. Now, the main example that you have is large businesses that are tradable will have cash. Now, when you have cash, where does the business put the cash? They put it in a savings account. And we are talking about such large amounts of cash that actually results in that amount of interest that they're earning being quite significant, so much so that it almost acts as a form of revenue for them. Now, they are not in the business of making loads of revenue from interest. It's just a byproduct of having a large organization. Now, there's great examples like pharmaceutical companies. In the process of where they're developing drugs, they have to save a lot of money. They have to have huge, huge amounts of cash ready to go for when they actually release the drug. Now, in that period of time, where do they keep the cash? They keep it in a bank account, and the bank account basically has interest, and that interest has to be recorded on the balance sheet as income. So the Sharia body came out with this rule to say, look, providing the sector in which you operate is permissible, you can earn a certain amount of impermissible income, providing it does not go beyond the 5% threshold. So if you made £100 in revenue, no more than £5 of revenue can come from impermissible sources, i.e., interest, income, or potentially from another sale of another good. Now, that 5% doesn't come from the Quran, it doesn't come from the Hadith, and so you would argue that actually where does this come from? And actually, it's basically come down from the Sharia determining this. If you were to say, is this a rule that is fit for all times and all places? You would say no. But it was something that was created to support people in this time and place. But inshallah, we will get to a place where we don't need that rule anymore. If we have enough large Muslim organizations, enough perhaps Muslim banks or Islamic banks, then we won't need this rule anymore. So it's almost like a bit of a stopgap to allow this type of investing. So that's the first part. What is the 5% rule? Basically, if there is up to 5% income from impermissible sources is permissible. Now, what do you as an individual need to worry about? Well, if you're investing into a company, you would effectively need to purify 5% that amount of revenue that they're earning. So if you go onto Musaffa, for example, and you type in the stock, you can actually see how much money they are earning from impermissible sources. And obviously, if it's above 5%, it won't be Sharia compliant, so you should sell it anyway. But providing it's less than 5%, you would keep it. Then you need to basically go away and purify that money that you have earned. So whether it's from the dividend or potentially from the sale. And you can donate that money either from selling part of the stock, or you can just do it from your wallet or your bank account or somewhere else. Ahmed, do you want to?
I'll just give a practical example.
Good. Yeah,
If
yeah,
you've
good.
invested, let's use for our French audience. If you invested 100 euros into a certain stock, and firstly that stock paid you out a dividend of 1 euro, so that's a 10% dividend. Great, mashallah. But unfortunately, you read on the Musaffa website that this company generates impermissible income of 1%. That means you have to go to that 1 euro that you received, take out 1 cent, and give that 1 cent to charity. As Adel said, you could just give it from your bank account. You don't actually have to go find the exact payment, somehow split up that, money is money at the end of the day. So you have to give away 1 cent to charity from that 1 euro you received. That's the first step. So purifying the dividends. The second step, which is a point of contention and not universally agreed upon, is purifying the capital gain. So if you bought a stock for 100 euros and it grew in value to 1,000 euros, so you've made a 900 euro profit on it, then 1% of that would need to be purified, which is 9 euros. So they're the two times that you have to purify every time you receive a dividend, and two on the capital gain sale, which is a point of contention. You have to do the dividend, whereas as for the capital gain, it's a mixed opinion on it.
Nice.
Yes, thank you both so much. Great and great. Thank you, Brother Ahmed, for that story as well. Both of you touched upon something of potentially different scholars saying different things. We also had a comment of someone saying, the Malaysia regulatory said one thing about one stock about the permissibility, but then Musafa said something else. So this is we always get this question, like AOFE versus other standards and compliance standards. Also, different apps saying different things. So, like, what is someone supposed to do when they come across that kind of those differences?
Do you only have AOFI on Musaffa, or do you have all of them at the moment?
Currently, just AOFE, yeah.
Okay, so who makes up the rules about what is Sharia compliant and what is not? It's not just this one special organization in the world called AOFI. There are other organizations that also make the rules about what is Sharia compliant and what is not. And a lot of these companies are not Muslim-owned companies. So who are these large companies? Companies like MSCI, FTSE, Dow Jones, S&P. These companies are in the industry of selling information to financial services. So naturally, they moved into the area of what is, or the information for Sharia compliant numbers. So they started selling the information. One body which focuses on the Muslim audience and is run by Muslims from its head office in Bahrain is AOFI. So some people might say that AOFI is more aligned with the needs and wants of Muslims than the other organizations. Other people say it doesn't really matter. All these companies like FTSE, MSCI, Dow Jones, S&P that have these Sharia boards on them, they all are looking out for Muslims. In reality, the differences between what one board deems as Sharia compliant versus another board is very minor. Very minor. For example, I'll give you, for those who are slightly better versed when it comes to financial numbers, but go to sleep for this next 5 minutes if you are not well versed. Some companies say when it comes to the amount of debt a company has, It has to be less than 33% of assets. Other people says, no, 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 it's 33%. And another company would say, it's not 33% of assets, it's 33% of market cap. And another company might say, no, 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 not just market cap averaged out over the past 3 years. So the rules come down to quite small, minute details, which some may argue is down to companies wanting to sell their data and wanting to be slightly differentiated, as opposed to everyone agreeing on one thing. And maybe it's quite typical for Muslims not to all agree on one thing. And maybe, inshallah, one day we can get to a point where all the Muslims agree on one point. Now, who should you believe? Do you believe Ayofi? Do you believe MSCI? Do you believe FTSE? This is where it comes down to, I don't know, maybe you can get a scholar on it. Some people would say, oh, you have to find a stock which is in agreement with all five different boards or six different boards that all have to say it's halal. Some people say, oh, no, as long as one person says halal, it's completely fine. Um, I will give a personal opinion, but my personal opinion amounts to nothing. So don't believe
Sounds
my
like a
opinion.
fatwa is coming here.
It's not a fatwa. I feel quite strongly.
Yeah,
I feel like sometimes people overcomplicate these things. And I feel like if one person says halal, it's enough to go on. But I think generally, if you follow one board, if you follow AOFE, follow them for everything. Don't try and pick and choose to try and make your life easier, as well.
And just, I guess, to double down, because you said if one person, just to make it clear, this is a board and a body of people. It's not just one scholar. It's a whole board of scholars that will obviously argue amongst themselves and they will, come to a decision at the end of the day. It's not just one person picking and choosing. So there is peace of mind there. And if you completely disagree with this whole system, then of course go away and become a scholar and then change the system.
Make another set of rules.
Yeah, make a seventh one.
thank you both so much. Yeah, so while Musaffa does promote AOFE, and we have Mufti Faraz Adam on our board. Um, I know very popular and well loved in the UK.
Oh,
We're
nice.
all the eight methodologies soon, inshallah, so that our users can feel that comfort and that empowerment that they can make the decisions for themselves as well, what they feel most comfortable with.
Inshallah, nice.
Inshallah. Okay, so I have a really big question that I think more people ask this question than they ask like what is investing and what is a stock. Can they invest in crypto? So Bitcoin is huge. I mean, it passed the 120. I mean, it went down a little bit now. Like, then there's meme coins and Ripple and this and that. But generally, people are always asking, can they invest in crypto? What is your guys' opinion on that?
I guess if we keep it really simple, from a physical point of view, as a human being, yes, you can invest into crypto. Now, as a Muslim, can you invest into crypto? You're going to have a difference of opinion as always.
Hmm.
Some will come with the argument that if the crypto that you're investing into has a use case, i.e., it can actually be used for something in the real world, then that gives it a greater reason to be, permissible to invest into. If it is simply a meme coin, i.e., there's no intrinsic value behind it, there's no purpose for it, and in effect, the price is just completely speculative where it just goes anywhere and everywhere, that in effect becomes gambling. So the simple opinion that you might find is if it is like a Bitcoin where there is potentially a use case for it, yes, it is permissible. Meme coins, no. But then it does get slightly more granular as you go further and further down the list of the larger, major coins like Ethereum or Solana, whatever it might be. And there are articles out there that plenty of that. I think Mufti Faraz has quite a few resources on this as well.
Definitely.
I feel like one issue is that sometimes people try and shop around until they get the answer that they want.
Mm,
Um, I think if you there's going to be opinions on both sides of it, and when you read an opinion and you read the explanation behind that opinion, if you agree with the explanation behind that opinion, then you should go with it, even if it's not what you want. And that's the problem with fatwa shopping that we have these days.
got it. Thank you both. Um, so there was another question here about savings account versus investing. So do you guys feel comfortable answering that? More of like, how do you balance money in savings accounts, earning, which there's a guaranteed profit versus investing, which you could lose?
Go ahead.
A savings account and investing. In a way, savings account is a type of investing because you can earn a halal rate of return. And we're not talking about your traditional savings accounts here that earn you a rate of interest. We're talking about Sharia compliant savings account, which may not exist in your country, but they do exist in the UK and they do exist in the UAE. and they do exist in other areas. So, so do you keep your money in a savings account or do you keep your money in stocks, shares, other things like that? I have both. And
Hmm.
my money in a savings account has a certain purpose, and my money that's invested has a different purpose. I do not invest money which I need for my to buy my new house next year in the stock market. Why? Because the stock market can go up or down 20% in a few months. I don't want to take that risk with money which I need within the next year. However, I still want to earn a return on it. Therefore, I stick it in a savings account. That's why a lot of people when they approach investing, they start off with thinking, what investment can I make that can make me lots of money? So the first thing they do is they start researching companies that they think can grow a lot in value. But what you should really do is you should go back and say, what am I investing for? What am I trying to save towards? Is it my retirement? Is it a new car? Is it a new house? Is it a wedding? And when am I going to do those things? If I'm going to do it in the next year or next 2 years, maybe I shouldn't be considering high risk investments like crypto, like stocks, where it can fluctuate significantly. The last thing you want to do is stick your money into stocks when you really need that money to buy something in 2 years' time. The stock market in 2 years has dropped 30%, which can happen. On the flip side, what happened if you put your money in a savings account, you've earned, 4% per year for 2 years, and in the same time the stock market's gone up 40%. You've missed out. But you're not trying to always get the best return. You're trying to choose the best investment for your money. And if the stock market has gone up at 40% in 2 years, while you've earned 4% per year on your money in a savings account, you cannot feel bad about that because you chose the right investment for your time horizon. And that's a big part of it. So don't consider savings account and equities as different options for the same money. They're not alternatives to each other. They are different things for different objectives.
Like shoes. You wouldn't,
Yeah.
yeah, you might wear high heels for a special occasion. You wouldn't wear them all the time. So it's, I guess, understanding. And there was a question that was related to that about the Wahid account, and I think it's quite a poignant point. Just in terms of the trying to compare two completely different investments doesn't make sense. And I think Ahmed's example was great. And try and use that with anything that you're doing is understanding what is the purpose that you're investing for. Now, if you're saying that, oh, my investment basically went down and I've lost money, well, it means potentially you have not understood the risks and reward because you haven't understood that investing in the stock market is a long-term investment, i.e., 7 years plus. So if you are watching it on a day-to-day basis or a month-to-month basis, something is going wrong. You shouldn't be doing that. There's no need. So if you're looking at the amount of money that's going in and going down potentially, and you're saying, well, I've had enough of this and I'm pulling out, it means you didn't understand it in the first place. So just be conscious of potentially being too active in moving your money around.
Can I say one thing? One thing that Adel and I keep saying is that investing in the stock market is a long-term thing, and we keep saying this number 7 years, 5 years plus long term. Whereas some of you may have made investments for like a month. You bought Nvidia and then you sold it. What me and Adel are knowledgeable in is investing, and we see investing very different to trading. Trading is when you're trying to pick stocks that are cheap, going in quick, in and out, in and out. That is a very different ball game to investing. So I just want to caveat that for people who misunderstand. Some people say trading has its merits. Other people say it doesn't have its merits. But trading is a very dangerous thing to teach, and we teach long-term investing, safe and steady.
Beautiful. You answered the question that I was just about to ask about the difference between investing and trading, because I saw that a question coming from there. So we also get a question about retirement accounts, and a lot of them are tied to our companies, and many of us don't have the ability to change what our company and I mean and it's also matched how much we put in and how much our company gives us. Um, I know that the regulations and the way it's done in the across countries and nations are very different, but I guess like how would you advise a Muslim to even approach their 401k and their restricted stock units and and that kind of arena?
Generally, when it comes to retirement, for most people, retirement is a long, I mean, sorry, not for most people. For the younger generation, retirement is a long way away. And when it comes to investing, it generally makes more sense to invest into higher risk assets for the longer term. And when we say higher risk, we mean things like equities. So Sharia compliant equity funds. And as you move closer to retirement, that's when you start to dial down the risk because you're about to stop investing that money and you're going to start using that money. Remember, you're not just investing money for the money to go up in value. You actually want to use the money for something at some point. So that's what you have to keep in mind. You don't just want £1 million in your bank account for nothing. And if you are just investing to have a lot of money, then you should go back and visit that point because some would say that's quite an un-Islamic way of investing. I just want to be rich. I just want to be rich. No, invest with a goal in mind, and understand that. But yes, if you're investing for retirement, and the rules are very different depending on which country you're investing, which country you live in. In the UK, there are many tax benefits, and in other countries, there are many tax benefits in investing for your retirement via your pension or any other means that you're given. So definitely look into it. And usually they would let you change, or at least in the UK, they allow you to change it to make it Sharia compliant. And if they don't allow you in your country, then start kicking up a fuss um, with the HR department or anyone who makes the rules. And usually they try and flex on those rules. At least that's what they do in the UK because they try and be very open and inclusive here.
I guess step one is number one, check, do you have a pension or a 401k? And if so, find out the details of what it's invested into. And once you have that knowledge, and it will come out with a name of some sort of fund. And remember, that fund will just be most likely a collection of different stocks. So ideally, find out that fund name. You can go into Musaffa and see if it is Sharia compliant or not. Chances are it won't be. And the next step two will be check if you can make a swap. Can you swap that fund for another fund that is Sharia compliant? And like Ahmed said, if you are not able to, that's when you need to start asking some questions and see if you can ask your, relevant department to change it.
Got it. Thank you both. America, as you may imagine, it's a little harder to find these Sharia compliant alternatives for 401k. But it's changing. I mean, there are some places where you can, like Fidelity, for example, if you have there's ways that you can invest in some of the halal ETFs for those. Um,
Okay.
I wanted to ask you, so recently for Uber went from haram or doubtful to halal. And so it's something that you subtly touched on in the last hour or so. If a stock goes from halal to haram or changes in status, like how often would you recommend, like a ballpark, how often would you recommend an individual investor to check to see if their stocks are still halal? And how often should they be monitoring it? If it's long term, something that you have sabr with and patience, like how often would you recommend that?
So I'll give you my personal opinion, and Ahmed will give you the more technical approach. I I'm of the opinion when basically I've stopped investing into individual companies because I don't want to deal with this headache anymore of checking. So that when I invest into stocks and shares, I do it via funds, and I do it via Sharia compliant funds, and I leave that headache up to them. I
Mm.
don't want to deal with it anymore, to be honest. I don't want to keep checking and I then have to calculate the purification amounts and disposing of it and all of that sort of stuff. So I go for the very passive approach of investing into Sharia compliant ETFs, so Sharia compliant funds. Ahmed can maybe give an opinion on if you were to go down the opinion of picking stocks.
Wow, I'm gonna plug Musaffa here, and not because they paid me. Musaffa has this thing where you can link it to your brokerage account depending on where your brokerage account is, and it can start flagging up if a stock moves from Sharia compliant to non-Sharia compliant. So that's a nice way of doing it so that you don't have to check. Generally, companies will move when they release their earnings. And if you're following your stock quite closely because you've invested into it, usually you might receive some sort of notification on your app when they've released their earnings, or that's a day when it suddenly goes up 10% or down 20%. And you're like, oh my God, what happened? It's probably because they released their earnings, so that's a day to check. But I think if you're quite methodical about it and every few months, every quarter you checked in, that would be a good way to do it. But then of course it comes with the headache that, oh, I wasn't planning to sell it, but now I have to sell it, and how much of the gain that I made is no longer Sharia compliant, and that can provide all sorts of hassle. Um, but it's something which is doable, it is achievable. And even depending on how sophisticated you are, And if you have access to a scholar, some people say, look, if it's only become Sharia non-compliant for a short period of time, depending on why it's become non-Sharia compliant, you don't have to sell it immediately and things like that. So it starts to become quite complicated. That's why if a company is on the edge of impermissibility, like its impermissible revenue is 4.9%, instead of taking the risk and going for it and then it suddenly becoming impermissible and then repermissible and all that stuff, sometimes it's just nice to look for companies well within the margins on all the different fronts. And the nice thing about Musaffa is that it has all the different metrics for all the different ratios. So you can see, I think they have the little graph thing that goes like that, and you can see if it's well in the green, then you should probably be all right. But if you're investing in a company and it's close to the red on some of them, or in the yellow section, then maybe you need to check on it more often.
Mm.
Do you have any more information kind of on like how the Musaffa app could be more beneficial, like
Yeah,
for that particular cause?
yeah. I mean, alhamdulillah, we do give automatic notifications. So thank you, Brother Ahmed, for the plug there. And so, anyone who is following a stock or has linked their brokerage and is invested in it, you'll get automatically notified. And we'll give all of the detail, the research, the deep research of why that change happened. So you can feel rest assured that you know that background as well, because we give the historical as well as the and so you have that trailing record as well. Um, so I mentioned a question here, and it's I think a lot of us are feeling this way. Like every day we're thinking that the stock market can crash at any moment. And so anything that you can say from your guys' experience and history working in this field for such a long time when it comes to patience and when it comes to riding the wave and when it comes to also people ask about commodities and gold, these so-called safer investments to hedge against stock market volatility. So anything you can mention there to help us reframe mindset changes, anything like that.
Okay, I'll try and do it very quickly because I can see the time. Investing into businesses and stocks, in effect, comes with risk, and you have to accept that risk. And by you accepting that risk, you hopefully will be rewarded, and your reward would obviously be getting a greater sum of money than what you started with. Now, when you go down the route of picking individual companies, yes, you become very exposed to potentially geographical or political or other issues that are outside of your control. The next step up is you potentially could pick a regional fund. So you could go for, let's say, a fund that invests in just the US. Now, you would argue that obviously that is less risky than picking one business because you're not worried about the performance of one company. Now you're worried about the performance of the whole country. But that's obviously slightly better, and that perhaps has removed some of your risk. Then you could potentially move to a an even more geographically diverse region, potentially go for a whole continent, so like Europe. So now you're not worried about one company, you're not worried about one country, you're worried about the performance of a whole continent. And if you want even more diversification, you could go for a global fund. So now you're not worried about one company, you're not worried about one country, you're not worried about one geographical region, you're just worried about the whole world. And in theory, over time, the global economy does grow. Now, obviously, in some years, the global economy does shrink. Think COVID, think 2008 financial crisis, think 1980s. The global economy has shrunk in previous years. However, it has always recovered, providing you can wait it out. So the geographical diversification could be a critical part in dealing with some of these fears around not knowing what is going on in the world in terms of geopolitical tensions and other things that are happening. So sometimes a globally diversified portfolio is a nice way to mitigate some of that risk.
And I would say when in the ups and downs of the market is very different from the ups and downs of an individual company. When we talk about an individual company starting to go down or having a big drop, it may mean it's the beginning of the end for that company, and that company can easily die out. And if you try and think of a company that's been around for, or that's going to be around for the next 500 years, it's probably none of the companies that are alive today. It's just the natural cycle of companies come and go. But the market as a whole will go up and down, not based on the fortunes of one company, but generally how the world is doing, exactly like Adel mentioned. And the nice thing about that is generally it comes back up. And as Adel mentioned, because the world's economy develops year on year, but more so than that, the value of money decreases year on year because of inflation. And there are going to be times when you're going to look and the market's going to be so far down and you're going to think, this is that it cannot come back from here. But it happened to me during COVID, and I thought, it's all it's all going to go down to nothing. The world's never the same. The world's not going to go back to normal, and it goes back to normal. And it happened during the 2008 financial crisis. And more recently, with Trump's tariffs, you think, oh, the world's not going to be friends anymore. Trade is going to stop. This is going to affect the market in a massive way. And then you hold on long enough, and then it just bounces back up. That's why you have to align your investments with your goals. If I was invested for the short term and then Trump comes in with his tariffs and then my stocks are suddenly down and I'm freaking out and I have to sell it, I'd feel so much more worse as soon as I look back in 3 more months and I realize the market's now at new highs again. But if I'm invested for 5 years and then Trump comes in with his little tariffs and the market tanks a bit, then it's all right because I'm holding for 5 years' time. But what if you look at the other way around? What if you're investing for like 10 years and now we're in year nine? I'm in year nine, and all of a sudden, Trump has announced his thing, and my investment has dropped significantly. You got two things on your side here. One, because you've invested for 9 years already, your investments are already significantly higher based on the past 9 years of performance. So when Trump comes out with his little statement and the market's dropped 20%, it's not a huge impact compared to how much you've invested in. Secondly, because you're getting closer to your goal, you should be de-risking. You should be removing some of the high risk assets and trying to look at diversifying, not just across economies, as Adel said, but into different asset classes. Think Sukuk, think gold, think property, think Islamic savings accounts. And when you mix all those things together, you can lower your risk significantly.